Welcome to the Alternative Investor. Satrix has launched the first exchange-traded fund on the JSE to include the full universe of large, mid and small cap South African listed companies by tracking the FTSE JSE All Share Index. The Satrix Capped All Share Index gives investors exposure to large multinational companies such as BHP, Richmond, Naspers, Prosus Stable, while providing broader exposure to the marker than other tracking indices such as the Top 40 Index. To talk to us more about it, we're joined by Nico Kater, who is the head of portfolio solutions at Satrix Investments. Nico, thank you so much for your time. Let's discuss the rationale of launching this particular ETF.
Well, the Satrix Capped All Share ETF, or CAPI for short, will be the first South African fund to track the full universe of large, mid and small cap South African companies, as you mentioned, offering broader exposure to the market than other available tracker indices. Now, the CAPI listed last Wednesday with the JSE ticker STX CAP. This provides investors with exposure to more than 140 listed South African companies. So it's a very broad market fund that we're very excited to bring to the market.
What has been the demand and appetite since the announcement?
Oh, sorry, I didn't hear you there.
The demand and appetite since the announcement of this ETF.
So the IPO launched at 43 million rand. So that's quite a large IPO from our perspective, and certainly conveys the fact that a lot of institutionals as well as retail investors are quite excited about the launch and the ability to gain a broader market exposure to more South African companies.
Right. When we look at ETF demand as a whole, I mean, since the launch of ETFs, what do you make of South Africans' appetite for ETFs? Are you seeing an increased demand? Are you seeing an increased interest in ETFs, and that, potential investors are understanding how ETFs work?
Certainly, investors, particularly retail investors, are warming to the fact that ETFs offer a fantastic way of allowing you to trade into a basket of shares. So think of this, the CAPI, for example, roughly 3/4 of what you buy when you invest, let's say, 1,000 Rand in the CAPI ETF, roughly 3/4 are allocated to the large liquid counters that investors gain exposure to through other trackers, such as, for example, the Top 40 ETF, Satrix Top 40 ETF. Now, in addition to this, the CAPI offers investors roughly 20% exposure to more than 50 mid-cap and 5% exposure to more than 60 small-cap companies, respectively. Now, further, as the name suggests, the CAPI, we cap weight exposure 10% at the quarterly rebalance, thereby limiting single stock exposure. Now, at Satrix, our reason for existence has always been to provide investors with easier access to the broad market for less. Now, we simply cannot deliver on this any better than through the broad market CAPI ETF that we're listing at 0% management fee. Now, this fee waiver applies until June 2022, after which a highly competitive fee of 25 basis points will be added to cover management expenses. So you're getting a lot of value for your investment.
I'm going to put you on the spot here. Since September last year, Satrix has launched 5 new ETFs. In a world where there are so many ETFs to choose from and, investors have this paradox of choice, what makes a good ETF? How do you know if a particular ETF is for you?
Look, you're 100% right. There's a lot of options available for investors, but we believe this is putting the power back into the hands of the investors. It, if you like, democratizes the investment process, where investors are able to hold these extremely transparent, low-fee investment vehicles and then simply decide which offers them the most value. Now, if you look at currently the holdings within the CAPI, it offers unparalleled diversification. It offers great upside potential that the small and mid-cap exposure is providing you to the portfolio overall. And its consistency in terms of providing you this great exposure at a very low cost certainly provides investors with a lot of value. So you're right, we have launched quite a few ETFs, and we believe this enables investors to, at a low cost and trading it very easily on our online platform, Satrix Now, enables you to govern your own investment portfolio. And thereby create wealth for the longer term.
Right. So when you have to look at the world of ETFs, from your perspective, what would you say are some of the misconceptions about ETFs that people don't really get?
So it's important to stress that ETFs, very much like unit trusts, are regulated by the same regulatory body. It undergoes the same scrutinizing by the regulatory authorities. And so it is equally safe to a unit trust holding, for example. The benefit that an ETF has is its transparency, its high liquidity. It trades on the JSE just like any other share. So it's easy for investors to buy and sell. It's easy to redeem your investment proceeds. And it's easy just to keep a track of your investment growth over time. But exactly the same way unit trusts are regulated, so ETFs are regulated, with the additional benefit that typically ETFs have a lower management fee, right? Because all investors have the same fee in an ETF. In a unit trust, you often see these layered fees, where the retail investor, the man on the street, typically pays a higher fee. Also, from a transaction cost perspective, ETFs generally have a lower fee. So as an overall total investment charge, your ETF offers a lot of value.
When you look at the innovation of ETFs, I mean, I'm looking at the stuff that you guys have, launched. You've got the inclusion and diversity ETF, the infrastructure feeder ETF, and recently the launch of the China ETF. When you look at the innovation that a lot of the asset managers, a lot of guys like yourselves as well are getting involved in, what is exciting for you over the next 5 to 10 years in terms of where ETFs could be going, whether we could start seeing more crypto ETFs, et cetera, et cetera? What's exciting for you about the next 5 or so years?
It's an incredibly exciting space. So as the largest index tracker in Africa, Satrix is always trying to be at the forefront in terms of providing investors with new access to new markets. Like you mentioned, China, it's an exciting investment opportunity. If you look at China as an investment opportunity, this ETF offers you exposure to an entirely different world altogether. So we always emphasize long-term wealth creation requires sufficient diversification, cost management, so having lower fees, and ETFs offer you unparalleled diversification. If you look at a composite holding of, let's say, for example, the China ETF, some domestic holdings, for example, looking at the CAPI that we listed last week, very much a diversified holdings portfolio, and you can combine all of these investments as well. You have the all-country world index tracker, for example, that we also offer. All of this just enables investors to build a well-diversified portfolio where the emphasis, the focus is on reducing fees, increasing diversification, and thereby growing wealth longer term. So it's an incredibly exciting space. And, watch the space. We're going to be expanding our portfolio of offerings to investors that enable them to more easily trade into these positions. It's an exciting world for investors out there, and a lot of choice always brings a lot of questions, what to invest in. From our perspective, always the emphasis should be on diversification, ensuring your eggs are well diversified, put into different baskets, and that your cost management is kept to a minimum.